We got a call in from Jason from New York. So how can I help you out, Jason? What's going on, man?
Hey, Daryl, how you doing?
Hey, I'm doing great.
Good. I had a question. I understand how your money management with the binaries, but what's your general rule when you're trading the futures as far as moving your stops and your risk management as far as when to get out of a trade? For instance, on an oil market, what's your risk tolerance? What's the max you'll go? That's really what I'm trying to get a handle on here.
Okay. Well, that's several questions in one. Some good ones too. First one is your risk tolerance. Obviously, is different for everyone. For me, look, if I get down more than 5% in a day, I want to stop for the day. Okay, that's just one. Like that day, you call it, walk away, so you can come back tomorrow. So I try to not risk more than 1 or 2% of my account per trade that I make. So based on whatever that amount is, then that would help me determine. Okay, then I can find out where my stop is. Okay, so let's say you have, I don't know. We'll say let me pull up a calculator. We'll make it easier. And this is where I like things like spreads and stuff like that because you can more control your risk a little bit better. But I'm just going to make up a number for a second. All right, so let's just say somebody has $20,000 in an account, and they're willing to risk, we'll just say 2% a trade. So they can risk $400 a trade. Okay.
Okay.
Let's say where you set your initial stop in, and let's just talk oil futures at the moment. Since talking about oil, let's say it's 20 ticks away. Okay. So if your stop was 20 ticks away, that's a $200 risk, right?
Okay.
So $10 per tick. So therefore, you could trade 2 contracts. So what I do is I don't base my stop on my risk. I base my size on my risk. So how much am I willing to risk a trade? Where is my stop on this trade? That defines my maximum risk that I'm willing to take. And then that lets me know the quantity I want to trade. So you have to always start off going, how much am I willing to risk a trade? And then what's really cool is sometimes you get like these really tight trades that are 5 or 10 ticks. Well, then you can go and you can do 4 or 5 contracts, So, if you're risk $400 and it is only a 10 tick stop, then you can end up doing 4 contracts. But I always want to make sure that I base my size off of the amount of risk I'm taking, my risk off the percent of my account that I'm willing to actually put at risk on a trade. And then I want to choose that stop based on price action. So I am a big fan of starting off with like a swing high or a swing low on a trade. So, for instance, let's see here. I got a chart of the Dow up just at the moment. But let's say I'm looking at this and I see this is a downtrend. I'm looking for a breakout. It went down, it pulls up. I'm looking for it to break back. Let me draw a line. It'll be a little easier if you're able to watch on the charts. But basically the market, is going in a downtrend. It pulls back and makes, higher lows. Okay?
Mm-hmm.
And I'm waiting for it to break out of that low to hop in the trade. So now the furthest stop I would possibly use would be like that swing high since that point. Okay?
Okay.
But then I'm going to immediately have some sort of indicator, and this is more just for objectivity. It's not that there's a magic indicator. I mean, I found some that I've made that work better than others, but something that is sort of a trending style indicator, and I use what's called an MVP predictor, but that's what these little triangles are, and then I trail my stops with it automatically. So it goes down, 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 down. And then when price hits it, then I'm out of the trade. So that way, because if I have found if I don't find an objective point to put my stop first out of the gate, then I will risk way too much money because I want to be right. And so I have to say, if it hits this, I'm going to define myself as wrong on this trade and be okay with that. And then that lets me not overtrade my account, not let my losses run, and not trade too many contracts. Okay?
Okay.
And then I have to have an objective method that says, how am I going to handle a winning trade? Because most traders, like probably in the high 90% of traders, are not very good at handling winning trades. They cut their profits short because they're so happy to finally see some green, that we're like, oh, it's up. I made $200. I'm out, or, whatever. And I mean, those are the days where you can make thousands. But you're like, hey, I'm just glad I made 200 because it's so much more pleasurable to take that profit and feel good about it. But what I found is I make a lot more money if I will trail my trades objectively. I do give up some of that money. I'm never going to get the entire trend. One thing I learned from Alexander Elder, I don't necessarily agree with everything in his book, but he has some good things. It was like one of the first books I ever read called Trading for a Living. And one of the things, he talked about was the best traders are trying to get the middle third of a trend. And if you can get the middle third of a trend on a consistent basis, you can be a very, very wealthy trader. And if you consider this trend right here that I have in my chart, it went from like 16,730 all the way down to, you could say, 17,496. All right. And if I was actually doing this trade, I would get in at 17,583 and I would get out at about 17,540 or so right there, maybe a little bit lower. So maybe a little more than a third on that one trend, but I'm objective. So that I have an objective entry, like when it goes down, I'm going to do it when it pull back. When it breaks the low, I'm going to get in. I'm going to put my stop at the swing high, and then I'm going to immediately start trailing my stop with this MVP predictor. But there's, I don't know if that helps, but start out with a defined stop. Let that defined stop then calculate what your risk is. If it's too much risk, then either you need to trade a smaller tick value contract, like instead of an oil contract, maybe you trade a mini oil QM, or maybe you trade an oil spread, which is $1 a tick. That way, you can basically have, let your stops be determined by the market, by the price action, not by your account size, which means your markets that you trade may be determined by your account size. And then your ratio of contracts, your number of contracts is based on what that risk is. And then when you execute, you place that stop, you live and die by that stop, and then you trail it objectively to allow your profits to run. Now, that's for obviously trend trading, not scalp trading. But for trend trading, that's the exact method I use to manage my risk and manage my profit.
Okay, so I understand. That's great. When you're trailing the stops, you're basically, like you said, you're adjusting it based off the market conditions then.
Right. So, like, on the chart I have up now, I'm not sure if you're able to see it, but on the Dow here, see these little red triangles?
Yep.
Okay. And basically what I'm doing is I'm trailing with those red triangles. And eventually they become faster than all the other indicators on the chart, but they give a lot of room for the market to breathe. So I don't get knocked out at every oscillation, because that really is annoying when you're trading, right? So the market bumps up a little bit and then flies down and you're out of the trade. So it gives enough room for the market to breathe, but as the market really starts moving, it really starts moving. And then eventually will actually flatline. And that's usually when either it's going to oscillate and pop down, or, I'm better off waiting for the next entry. So I would literally what I do is I put it 3 ticks above, and I just trail on every bar, every closing bar right there. And I just trail it all the way down. And it's very, very mechanical how I trade. So it's not emotional. I'm like, I'm just, okay, move the stop, move the stop, move the stop. So, and here's another trade doing the exact same thing over here on the right side of the chart, that's going on right there. Get in, everything lines up, basically a whole bunch of red stuff. Breaks by 3 ticks, I get in, I have my stop up here at the swing high, and then I just start trailing it, 3 ticks above that predictor, and eventually, let's see, over here somewhere, we're probably going to get out the trade. Yeah, we got, a small profit on that one, but little profit right there. And then it goes into a long trade, doing the exact same thing. And I'm okay with missing trades. I'm okay with getting small profits. I'm not okay with taking a loss larger than I should have because I didn't find it up front. I'm not okay with getting in a trade late and what would have been a winning trade if I would have followed my rules turns into a losing trade. I'm not okay with missing out on a massive profit because I didn't objectively trail my trades. I'm okay with missing out on a big move. I just don't want to miss out on it because I got scared and took the profit early. So that's why, for my discipline to overrule my own emotional deficiencies that we all find we have in trading, I've had to find very objective methods for trailing my stops. And by the way, my stop trail, whatever that is always different than my entry rule. So whatever I'm using for entries, I'm not using for stops. So like I'm using these little triangle things right here. Like I said, I call them momentum volatility predictors, but MVP arrows there. I use those for my stops. I don't use them for my entries. I use other stuff for my entries. So, and I got 3 different ways I enter. But your main question being about stops, that's how I move my stop. I objectively trail my stop down. And then if I want to get all master the market thing going on, then I will look at what I call ICE or deviation levels. I talk about deviations a lot. And those are points where I may decide to take profit. So did I help you out, or do you got a couple more questions?
Absolutely, Daryl. Thank you for your help. I appreciate it.
Awesome. You bet. Anytime. Thanks for calling in.
Okay.